Ryan, it's a big day today. We have the latest Ethereum upgrade.
Yes, exciting stuff we're going to talk about here in just a moment.
Very
How are
exciting
you, sir? Welcome back to the show.
I'm good. I was out last week. Some strep throat, but I'm back at it. I'm healed. I'm stronger. My immune system's stronger. The crypto market is widely up over the last week, so I'm feeling good.
Yeah, the coins are stronger too.
The coins are stronger. They recovered with me.
Beautiful. Good to have you back. Let's jump into the show. As you mentioned, we're going to talk about the Ethereum upgrade. So today was the biggest upgrade to the Ethereum network in over a year. I think 8 different Ethereum improvement proposals were implemented as part of this process. But the one that stands out is, 4844. Check my notes there. This is ultimately going to make it a lot cheaper to transact on layer 2. So let's talk about that, why it matters. We'll explain what L2s are. We're going to focus on a couple of them here today, compare these chains, and maybe we'll find some interesting opportunities as
I think we will. I think we're going to look at 3 coins today that I'm quite excited about. I own one of them, but we'll get into that later.
All right. So let's talk about the Ethereum upgrade that happened. Biggest network upgrade in a year. Makes storing data on-chain a lot cheaper. Why does this matter? Ultimately, it's going to reduce fees to transact on layer 2s. And the idea here is that this scalability will equal more users, more transactions, more use cases, more value on chain. I think that's the big picture view. You need to get to a point where when you're transacting on these networks, you're not even thinking about fees.
Right.
It's sub penny. This gets us closer to that when you look at the Ethereum roadmap.
Yeah, I mean, it's really amazing how far we've gone with blockchain technology in just the last couple of years. I mean, a few years ago, before the first level 2 was actually the Lightning Network, which came out in 2018. But before that, it was quite expensive to do any sort of transaction. Now all these beautiful layer 2s are coming out, and it's so cheap. Like you said, it could be fractions of a penny to do a basic swap.
So let's talk about what a L2 or a layer 2 is for a second, Mike, before we jump into some of the ones that we're focused on. But you're talking about scaling a blockchain, increasing the amount of transactions, the rate at which those transactions are validated, ultimately leading to more users. Is there anything else that goes into it when you think about it? Or what's kind of like the most important piece to a layer 2?
Well, if you send a transaction on a layer 1 network like Ethereum, you send it to the blockchain, right? It gets validated on the blockchain by a validator, and then it gets added to the block, ultimately to that great security that blockchain provides. But that's not too efficient because you're just doing one at a time, piecemeal, and I think the cost to do a single transaction on Ethereum right now is about $50. And in a world of zero commissions, it just doesn't make a lot of sense for people to go the
It's expensive to use these things.
Yeah, it's very expensive, unless you're trading size. The good news is if you trade $1 or $1 million, the transaction fee is always going to be, as of today, $50. So what layer 2s do is it's a protocol built kind of like any decentralized application. It's built on top of the Ethereum network. And what it does is it processes transactions off the main chain, right? So it combines the transactions and then sends them up after they're bundled together to do it as one. So maybe me, you, and 50 other people are doing a similar transaction. Instead of just sending them piecemeal to Ethereum, we can do them sort of off-chain in a way through these layer 2s and then send them together. And it makes no difference to us as far as the fill prices or anything like. We don't lose anything, in other words. Sometimes there's a little bit less liquidity, but that's fast changing.
Okay, so ultimately it's a lot cheaper, a lot more efficient to bundle up all of these transactions, package them together, process them in a sense off-chain, off of Ethereum layer 1, the mainnet, the main chain, and then settle them on that chain, take advantage of that security layer. Mm-hmm. That works, but it's at a much cheaper rate when you're able to do all of these things and then ultimately settle.
Much cheaper. Much. It's kind of like the express lane on a highway. I like to think of it. The Ethereum mainnet is slow. It's congested. There's a lot of people on it. But once you go off it into this express lane, into this layer 2, you just soar right through it. And the toll fees are much cheaper as well.
So a lot cheaper. It's scalable. You can ultimately see more use cases. And I think the important thing here, too, is that it is compatible with Ethereum. We're talking about inheriting the security of Ethereum. We're talking about the Ethereum virtual machine. you were able to basically do the same things, right?
Sure.
These applications that run on Ethereum can then run on layer 2. It's very easy to do that. And this thing works together over time, but is able to process a lot more.
Right. And there's the most secure layer 2, which we're going to get into soon, is, of course, ones that use optimistic rollups. And these are most compatible. They leverage the security of Ethereum more so than other ones. And those two big ones that stick out to me that are kind of dominating the space and just taking off right now are Arbitrum and Optimism.
Okay, let's talk about those. So we've got the three that we're going to look at here: Polygon, Arbitrum, Optimism. You talked about Arbitrum and Optimism, optimistic rollups. We should point out that Polygon is more of a separate network or a side chain or network of side chains, I suppose, compared to more of a layer 2 directly on top of Ethereum, like Arbitrum or Optimism. Right. But Polygon is an Ethereum scaling solution. It is Ethereum compatible.
Yeah, I mean, like you said, all three of these can be used, as a layer 2 for, any DeFi activity you want. But most people prefer Arbitrum and Optimism. Most people like to launch projects on them because they use something called optimistic rollups.
Okay. Well, and we'll take a look at that data in just a second too. I want to jump over to DeFi Llama. We can take a look at Token Terminal, but we've pulled some of it because I just want to compare these for context. You look at, they're all essentially scaling solutions, but they're doing different things. They might be generating different amounts of fees, being used for different purposes.
Right.
It doesn't necessarily make one better than the other, but it's important to understand some of the differences between these because they're not exactly all the same or being used for the same thing either.
Yeah, it's different tools for different jobs, right? Polygon has a lot of value, as we can see. Transactions per year, it eclipses Arbitrum and Optimism. But Polygon is mainly used for NFTs, for gaming, for building social tokens for ICOs and things like that. People favor Polygon for those sorts of activities, whereas Arbitrum and Optimism are almost synonymous in that they are huge players in DeFi. They've taken over completely DeFi because of that inherent security that optimistic rollups provide that Polygon does not.
Yeah, and we'll point out some of the DeFi apps and where a lot of the fees are coming from, where the users are here on some of these chains in just a second. But to walk through these, we've got Matic. The Polygon symbol is changing, but that's the current symbol. We've got Arbitrum. We've got Optimism here. TVL, that stands for Total Value Locked. There's the most right now on Arbitrum. Monthly active users, obviously Polygon has a lot more, and then you can see transactions, the average fee per transaction. Polygon's much, much cheaper than the other two.
Sure. That
said, we're looking at estimated reductions in these fees here of anywhere near 80 to 90% once a lot of these layer 2s have made changes to now adopt the new proposal.
It's incredible how fast Arbitrum and Optimism have grown in the last year with these relative high fees. Imagine what they're going to do after these different protocols start utilizing the new Ethereum.
Well, I think to that point, that's why you are seeing a little bit of a rally in these.
Yeah.
I mean, a lot of these tokens, and we'll take a look in a second, have done very well. Not necessarily against Ethereum itself, but they've done well. That said, I think that's the idea, right? As these fees go maybe sub-penny, where you're not even thinking about them, in the same way that you're interacting in Web 2 or when you're trading on any other platform today, you're not really thinking about the fees in order to facilitate that process.
Right.
You're not going to think about it here. And this is a step towards that with this upgrade.
It just, Ryan, I look at these fees, and I started in this industry in 2006 at Thinkorswim. And commissions, I don't think back then anybody would ever think that commissions. A lot of brokers have, zero commissions for options even. And I don't think anybody ever saw this actually happening. But of course it is happening. So I look at crypto and I wonder if in 5-10 years from now, we'll see something similar to the payment for order flow.
It's quite possible. I mean, I think that you're going to ultimately see it become easier to use. Otherwise, people just aren't going to use it, right? I mean, fees at this point are somewhat prohibitive depending on what you're trying to interact with. It's really hard to do anything at a smaller scale if it costs $100 in gas fees, right, to interact. So I think, this could lead to that, but this is going to make it much more usable over time. So when you look at this, Mike, is there anything that stands out to you? If I were to ask you, okay, we've got these three tokens up here, they're all layer 2s, their ETH scaling solutions. Here's some of the more fundamental data, I suppose. Would you have a view as to which one you think is doing best in the market?
Well, let's make this personal, right? I own Matic and Arb. I think you own both of those too as well, don't you?
I actually own all three of these. Yeah.
Oh, you own all three?
Yeah,
Okay.
I probably invested in Matic or bought some of that first, and then in the last over a year or so ago, or year, whenever the Arbitrum token hasn't been around that long. But
Yeah.
I've started to invest in those over the last year.
I missed Optimism. I thought about it, but I didn't do it, and I'm regretting it now, of course. But when I look at these, I look at use cases, and I see use cases for all of them. Matic, again, NFT, gaming, a million other applications. Arbitrum is dominating DeFi. Optimism is primarily DeFi, but it's kind of a multi-chain in that it has a lot of different applications on top of that too. But I like them all, Ryan. I mean, I'm looking, number one, at the fees. The fees are going to go down. People are going to build more atop of these layer 2s. And I mean, I think they could potentially all be undervalued. We're going to get into the market cap pretty soon, but I think it's a good opportunity. And any one of these I like.
Okay. When I look at the fees, one thing I want to point out, and I think it's an appropriate way to approach a lot in this space, is to ask that question, does this protocol generate revenue in any capacity?
Yes.
That, to me, is a box I want to check as an investor, or if I think, hey, look, there's an opportunity for this to go up in price for real reasons, because it's an investment in this technology or in the protocol, right? If that's your view, you want to check that revenue box. And it's nuanced, but you look at fees as revenue in many cases. And that's something that is tangible, is real. It's not cash flow in the typical sense, but that's something I would focus on. And so looking at that, I would think, okay, and I have an idea of what's happened already, but I would think Arb, Optimism maybe are doing well as a result. Or if we continue to see a growth in those fees, then maybe they do better. Now, the upgrade and the reduction of fees might be counterintuitive or might be counter to kind of that analysis, but the idea is that you're going to see many more users, certainly more than 1 million for these networks that are going to transact over time, and you'll make up for those lower fees in volume.
Tell me again the duration for these fees. Was it?
So the fees that we're looking at, this is the annualized.
This is annual, okay.
Annualized fees today. So that said, I want to jump into the performance just to show you where we are and look at these kind of from the market perspective. So Matic's $1.27, Arb's $2.12, Optimism is $4.41 at the time that we put the slides together. From a market cap lens, Matic is much bigger, and you can see Matic's been on quite the tear over the last month or so, but has really been making up some ground versus what we've seen happen in the last 3 months with Arb and Optimism. Optimism up 90%, Arbitrum up 73%, but not really much going on versus Ethereum.
Yeah, I mean, Ethereum, it's had a hell of a run this last month or two. And something else I'd like to point out regarding Ethereum is if Ethereum wins, all these coins win, and back and forth. They help each other out because they're built atop the Ethereum blockchain. So a good analogy would be like being able to purchase, and I've said this before, being able to purchase the internet, right? If you buy the internet, then Google, Facebook, Amazon, they're all going to go up as people use more of the internet.
Right. If your macro view at the time is, and you could have some sort of investment into it, that the internet's going to grow.
Right. I'm a long-term
This
thinker.
network is going to expand.
Yeah. And I always think of long-term. So I always feel like if I miss a coin, I'm like, well, at least I own Ethereum. That's how I feel like when I miss Optimism.
Yeah, I think that's a great point. I mean, the way that I kind of look at it in a similar way where this is all the same thing. At this stage, it's the same view, I suppose, from like a risk perspective, portfolio allocation sort of view. It's just what volatility are you looking for in your portfolio? These might be a higher beta view if you're trying to invest in Ethereum, because I think it would be odd where, to me, at least given how this has traded, anything could change, but it would be odd at this stage that we saw, a divergence in that relationship where Arbitrum Optimism were moving higher and Ethereum was somehow crashing. Like that just it's not really a reality given how these are tied together. And so this is just a higher beta view. If you think, hey, at least I'm in Ethereum, or that's my kind of overall big tech trade, this is another way to put that on.
Yeah, absolutely. It's almost like the pendulum analogy. The pendulum is Ethereum in the middle, and that's going to move like this, but the smaller level 2s are going to move a little bit more as
Yeah,
time
and
moves.
I mean, you definitely see that when we look at these relative returns. Some just go up a lot more than others, and some go down a lot more than others when they're all going down, but they tend to move in the same direction. So that said, Mike, I don't think there's one where it's pick this one over these.
Yeah.
We've hit on really just the surface level, if scratch the surface, maybe. I would challenge everybody to do your own research, look at use cases here. We've talked about more DeFi activity occurring on Arbitrum, Optimism, more use cases around NFTs, gaming, and just a higher maybe transaction throughput on Matic at this point. So different use cases, different chains. Ultimately, I think a lot of these things are just going to work together, and that's kind of the step that we're taking towards, I would say, today. But I want to also just jump over here and point out where you can see a little bit more about this. We've used DeFi Llama as a dashboard or a tool, but if you want to start to look at these chains and try to understand what are the use cases, what applications are generating fees on top of this chain, you can come in here, and as you scroll down, we'll just look at Arbitrum here. It's number 4. You can see more when you click on this. Here are the protocols that have been deployed to this chain, and you can see the total value locked across that protocol. You can see the fees or the revenue as well that's being generated by that protocol. So you can get a good sense of what that L2 is being used for, how that might change over time. There's analysis you can do here. So just trying to point everybody in the right direction. We're not going to get into specifics just yet today as to how we might look at this, or this is a good investment, that's a bad investment. We're not making, we're not giving advice in that sense. But this is where you can go, I think, to learn more. It's a good place to start.
Right. Yeah, so I'm just looking at this slide. So GMX is a big perpetual future decentralized application.
Yeah, and you can see the category here. So you're seeing a lot of derivatives trading through GMX, right? Perpetuals, other sorts of derivatives.
Yeah, very interesting.
It's all right here.
Yeah, and it's it's important to know before you buy a coin or a token to do a little bit of research. And it's all out there. A lot of people, they just don't know where to access it. And like you said, DeFi Llama is a great source. Token Terminal is another great one. So you could actually do some research, do some relative comparison to similar coins, see who's using it, how much they're using it. It's all out there.
Yeah, you do have that. I'm sure you've seen the meme where it's the bell curve, the standard deviations, and you've got most people like trying to do this really sophisticated analysis, just pulling their hair out sort of thing, very frustrating. And then you've got like this kind of, galaxy brain, giga brain sort of like on one tail, and on the other tail is just the, close your eyes and buy them all. And the rest is history. There is that element to it too, which is funny.
For whatever reason, those people, Anna, my girlfriend Anna's never gambled in her life. We went to a casino and she put some money in and, it hit just like that.
Some people are lucky, Mike.
My buddy bought PENN stock at $4 and a year, 20 grand he put in. A year later, it's trading at $1.40. First stock he ever bought in his life. So maybe those people got it right, Ryan.
Well,
I don't know.
You, I think we're at the right place at the right time.
Over the long run, we're going to prove right.
Yeah, I think there's some interesting trades still to be had in crypto. Frank and I did a show on Monday to plug that really quickly. Looked at the past Bitcoin halving cycles and tried to extrapolate, some view of what returns could look like this time.
Yeah.
And very interesting. So I think we're still early. We are on a path towards Ethereum becoming much more scalable, much more usable in the sense that it's cheaper to use. So a big step today with the upgrade. When we look at prices, I want to jump over to expected moves as we round out our show for the week. But Ethereum, no huge response here on the day. I don't think that just the this occurrence today makes much difference one way or the other. This has probably been priced in for some time. We knew that it was coming, but Ethereum has been up quite a bit over the last month, over 50%. So some decent moves there regardless, and we've started to see a little bit of pickup in or continuation in the moves that we've seen in those L2s that we talked about. But when we shift over to Bitcoin and ETH, looking at volatility, Mike, 73.2 on Bitcoin, Ethereum trading right around 4,000. Vol's come down a little bit, but it is near the one-year high here. We're coming off of the mid-80s for Bitcoin and Ethereum, still about 80% when we look at Bitcoin. What does that really mean? You can expect about an $8,000 move. At least that's what's being priced into the options market.
Seven-day move, right?
Over the next week, yeah, 7-day move. So that's your range there. I don't think it's out of the question that you could, certainly see a pullback in here. I would look for, personally, I'm looking for about a 10% pullback that would get you, back to some of these kind of shorter term moving averages. But we could stay in this territory and stay overbought, if you want to use that term, for some time. But, regardless of where that price ultimately it continues to trend to here, if we do move higher off of 73, I would be looking for about a 10% pullback with volatility at these levels.
Ryan, I'd sell that. I'd sell that straddle. I think it's gonna be a quiet week. I feel like we're at the top of the roller coaster. We're on a plateau right now, and I think we're gonna stay this way for the next few weeks.
Okay, yeah, we'll have to take a look next week at how volatility has changed. We'll see if you're right there with implied vols coming down. Bitcoin up about 9% in the last 5 days in terms of its implied volatility. Ethereum flat at a vol of about 75% over the last week or so. But those are your ranges. 400 on ETH. Before we wrap it up, Mike, any last words? How are you thinking about the market here? Solana is having a nice move today as well. I need to point that out, 164.98.
Oh, so wow. I missed that.
I got you to just jolt up in your chair right there.
Yeah, I thought I lost my Solana with the Gemini Earn program, but
you're back.
Apparently I'm getting it back. So I made sure I never looked at the price, but now I'm looking very closely at it. So I don't know, Ryan. I mean, this is just beginning. If we look back at previous bull markets, how long they last, the duration of them, a lot of these coins are still, half the value they were in 2021. So I'm long. I'm sitting on everything, and I'm going to play it by ear.
Yeah, I agree with you there. I think it is very early, going back to what we looked at on Monday, post-halving, and we've got to consider that we don't have a large sample size here. We have 3 occurrences. This will be the 4th. But on average, we're looking for a cycle from the day of the halving to the peak of about 500 days. Not perfect, but it gives you a ballpark for how you might think about the duration of a cycle if this is how it plays out. Certainly still early, and you would expect that there's some room to grow. What's different this time, Mike, is there are these massive ETF pipes that are connected to this.
Yes.
And I don't believe that it's money that's going to be all that short term in nature. It's possible, but I don't think you're going to see added volatility due to the ETFs. I think these flows, clearly have been, to this point, been one way. I think they grow. And if this really starts to pick up, which is funny to say given the size of the move we've already experienced, but knowing what or how this is traded in the past, there could be a lot more ahead of us.
Yeah.
The key, though, the art to all of it, right, is getting out at the appropriate time. Because for everybody that has that success story, you certainly have 9 people that rode it all the way up to the top, all the way back down, and here we are again. It's tough to think about, but that, maybe we can provide a little bit of a framework for how we think about it. We're not perfect, obviously, but if you have kind of a roadmap, it helps.
I'll give you my roadmap, Ryan. And it has worked in the past. I'll give you for buying and selling. So when I buy something, if I'm looking to buy something, usually I only buy large cap ETFs, but sometimes I see opportunities. And if I see an opportunity, if it's trading low, I'll say, wow, that's really good, right? When I was younger, that's when I would buy it. But now I don't buy it. I wait until I can no longer not buy it at that price. When I'm just like, wow. When your eyes go like this, wow, that's when I buy.
Yeah. It's either going out of business or this is as low as it's going to get.
Yeah. Okay. Same with Bitcoin. I'm at this phase,
Okay.
The kind of quietly nodding, but I'm not at the eye open stage yet. So I sell at the eye opening stage, and I don't think we're there yet. Okay,
well, we'll leave it at that. That's the Tasty Crypto Show. Victor Jones is up next with The Price of Truth. We'll be back on Monday next week. Until then, I'm Ryan Grace.
I'm Mad Mike.
Peace.